All right, so let's talk about capital gains tax and what you need to be thinking about here. First of all, tax-free income. Yes, that's how much gain you can make without paying any capital gains tax at all. And it's reduced from the typical, what we used to know, of 12,300 years ago to the new rate of 6,000 between 23 and 24 tax year. But that lowers again to £3,000 per person, this is, between 24 and 25 tax year. Anyone that's selling residential property will be paying 18% as a basic rate taxpayer, but anyone who is a high rate taxpayer will be paying 28%. Please note that you could be moved from being a basic rate taxpayer to a high rate taxpayer because of the disposal you're making. So it's possible that you'd be paying either 18% or 28%, but you could be paying both. So make sure you do your calculations, work out what it is you'd be paying. If you think about moving country, going on holiday, make sure that you get the best conversion rates before you do so. The link is in the description box below, but you can also use that QR code as well. Now, one thing I would say to you is that you need to use a solicitor to use a trust framework. Okay, that's really important. Now, we can help you understand the tax implications as well as some of the legal applications, but you will need to use a solicitor to do this. Replaces CGT with IHT. So the idea here is that you use a trust to, instead of paying capital gains tax, you defer that or minimize it altogether, and you pay inheritance tax instead. Now, as an individual, we all get a £325,000 lifetime allowance for inheritance tax. If you're a couple, it could be £650,000. So you could, in theory, give property away with a £650,000 gain using this strategy, which in this example can save you a massive amount of taxation. Anything above that IHT free allowance will be subject to 20% tax. So it's not all tax-free, but it's a big chunk, $650,000 between a couple to pay no tax on any gains that you make.